All right, guys, weekend is behind us. Hope you guys enjoyed the weekend. Hope you guys enjoyed the game. Hope you guys got some sleep last night. We've got a busy week ahead of us, and boy, oh boy, do a lot to cover in a very important video newsletter. It is Monday evening. You know we're getting ready for CPI Tuesday. We have a lot to cover, a lot of great trades I'm tracking for one of the biggest news reports, one of the biggest days of the month of February. As always, I'm going to cover all my favorite trades in tonight's video because I want to make sure you have a game plan to make some money on this news report tomorrow. Before we jump in and get this party going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And if you guys enjoyed the video tonight, do me a favor, will you? Hit that like button. Give me a shout out in the comment section below. Always appreciate hearing from you guys in the comment section. Thank you so much for tuning in and supporting this YouTube channel. But enough of the intro. CPI is tomorrow. Big news, big opportunities. Could be one of the best days of the month here in a trade room tomorrow morning. Where are the best trades setting up here for tomorrow? Boy, oh boy, everything bullish right now. What a reversal we saw today. Squeezing out all the sellers. S&P is bullish. Nasdaq is bullish. Oil is also very bullish right now. Now, we got to be careful. Obviously, some big news coming tomorrow, so we'll get our game plan ready. But, looking at the charts right now, until we know more from that CPI number tomorrow, the key is bear traps, using stops as fuel, trapping in sellers. And we'll talk about, there's three reasons why kind of the easy money, the bigger money tomorrow, with trapping in some bears. We see trapping one side of the market and using their stops as fuel. So we're going to go over all the details. I have both long side trades, short side trades. We're going to cover them all here on this video here tonight. By the time we're done, you'll have a good roadmap to make some money on Tuesday. Speaking of Tuesday, though, tomorrow is not, tomorrow's not your average Tuesday. We have one big news report on our radar tomorrow, 8:30 Eastern time, is that CPI number. I'm not going to waste my time or your time talking about what if it's higher or what if it's lower and what the expert, no, forget about it. The only thing that matters tomorrow is the market's reaction to that CPI number. I will not spend a moment of my precious time or energy even looking at that number. We know the number comes out at 8:30. We're going to prep our charts tonight, and we'll trade the reaction. If there's one thing we've learned over the past few months on this video, don't overthink it. Turn the news media off. Get off Bloomberg. Get off Yahoo Finance. Trade the reaction. Of course, tomorrow, we'll trade the reaction tomorrow morning in our trade room. We've had some really, really good days in our trade room in the wake of that CPI number. So remember, very potential, lot of volatility around the number tomorrow. So please be careful. Remember, be careful overnight. Be careful leading into it. It maybe gets a bit slow as the markets wait for it. And then oftentimes these can get pretty violent. We'll pick up the pieces, let the dust settle, and trade that reaction. And by the way, that is not the only big news report we have this week here. Tomorrow, CPI, retail sales on Wednesday, PPI on Thursday, OPEX coming on Friday. It's going to be a busy week. Got a busy week ahead of us. All right, back to our charts, though, because, after all, right, we know we have some news coming tomorrow morning. We know when that is. I don't care what the news is. All I care about is how do the charts react to it. Now, I'm going to go over each one of these markets and talk about my favorite trades for tomorrow. If you like making money, I would definitely recommend you watch the entire video all the way through, because every single trade I talk about tonight can be applied to your favorite market. Trades I talk about on the S&P can be applied to the oil can be applied to the Nasdaq, and vice versa. So don't just go clicking off after your favorite chart is over. I'm going to talk about different trade ideas, and they'll build on each other as you go deeper. Everything we talk about tonight can be applied to your favorite market. Let's start first though with the S&P 500 or the SPY or the micro S&P. These are tick charts. Upper left-hand corner, this is an 8,000 tick chart. They'll all be tick charts in the video here tonight. This is the 21 EMA. Be aware of that. And then one more thing, I have a bunch of additional chart time frames for you guys down in the description of the YouTube video. I got some 4-hour charts. I got some 60-minute charts down there. I'm not going to go over all the different time frames tonight, but if you want to see more, right, some higher time frames, which is a bit of the lens I'm looking at these charts tonight, definitely grab those links in the description, and you'll see 4 hours and 60-minute time frames will go right along with what I'm talking about here for tonight. Now, what's the most important thing right now we have on the S&P? The most important thing is the strength of this move. Anytime we see a strong move in one direction, we always expect to get deep pullbacks, trap in some bears in this case, and a retest of that level. You know, even if we keep going higher, right? Going higher, deep pullbacks, trap in some bears, right? And retest those highs here. It's a very bullish market right in front of us. Now, when you go down the description of the video tonight, you're going to see we are first of all, we're mixed. We're not exactly very clear as far as the overall direction bias. That's one thing you'll notice. But you'll also notice too, the S&P has a lot of overhead resistance. Again, you'll see that when you go in the description and look at those bigger picture time frames. Both the S&P and Nasdaq are running into some very interesting areas up overhead. In fact, tonight it took me a lot of restraint not to talk about reversals, because you'll see we are in an area where, I'll tell you, we're very bullish right now, but it wouldn't surprise me one bit if by the end of the day tomorrow the bears have snuck back in, taken control. And so we definitely do want to be aware of where we are and the potential for a CPI reversal sneaking up on us here tomorrow. So knowing that we're very bullish, obviously, right now, knowing that buyers are probably waiting for deep pullbacks to get long, but also knowing too that we're knocking on some big levels, right, up overhead. This is why I said bear traps are going to be kind of where the easier money is going to be here for tomorrow. Now, I'm going to talk about if we go higher here, because as we go higher, the Nasdaq tonight, which we'll cover here next, the Nasdaq has some very interesting breakout patterns. I got 4, maybe 5 breakout patterns to watch on the Nasdaq. So we definitely will take a look at the price going higher here. But I want to give you a couple ways to make money, though, if we can get that pullback. This is my favorite trade, right? My favorite trade is deep pullback, trapping the bears, back to retest the high. Now, there's a couple ways you can do this, right? So most important thing, remember, we're overall pretty high up right now. So if we can get a nice deep pullback, I'd love to get these bears to come in, think it's a reversal. Again, when you go to those 60-minute time frames in the description, you'll see there's a bunch of resistance up here, right? So I'm hoping that we can catch some sellers overthinking this. Because I was sitting here prepping my charts tonight and thinking, okay, Joe, don't overthink it. Very bullish right now. I know we're at overhead resistance, but we're not quite at that point yet where we can start calling tops on this market. We're not quite there yet. We might be tomorrow night, but we're not there right now. So I'm hoping that we can trap in some of these bears. Let them try a couple times down here. Very bullish again, of course. This big move up. I want to retest the high. If I can get these sellers to get trapped in, I can then use their stops, right? Use their stops as fuel with kind of a bear trap, right? We call these seller failure patterns in our trade room, or of course as part of the free trading course on the website. That is one of my favorite trades here for tomorrow. Nice deep pullback, rope in some of the bears who are trying to call some tops here right now, and use their stops as fuel for an easy run back up to retest the high. Now, there's a couple variations of this, right? For example, we may end up shooting lower. The bears may come over and they may retest that low. If they retest the low, this is even better for the bulls. Same idea, right? Same idea. Trap in some of those bears. Let them try a couple times, right? And we talk about this using stops as fuel in the free trading course, as you guys know. Let them try a couple times down here, because again, we're thinking there's a lot of bears up here trying to call this top. Trap them in and then use their stops as fuel, right? So nothing different there. But now, if we can get the run popping higher here, this is where a trap setup will come in handy. Oh shoot, I deleted it. Sorry about that. We go lower. We retest that low. right? We trap in those bears, let them try once, let them try twice, use stops. Now, as we go higher, where does the market want to go? It wants to go back up and take out that high. So now we find a new channel off the high, we find it off the low. See if I do that? And we look left and we grab that bear trap, right? That trap entry, that failure setup, any of the entry patterns we talk about in the free trading course, right? Off the low of that channel, right? So again, it may drop down, 1, 2, snap back up, right? It may drop down, retest the low, perfectly fine. Trap those bears, 1, 2, use those stops as fuel. And then as we make that strong punch higher, before we get back to retest the high, go find that new trend line, find that new channel, look left, find those traps. I love traps, right? My favorite out of all the entries we teach in the free trading course are the trap setups like I'm showing you here right now. Failure pattern, first test off the low of that channel. These are some of the trades I'm looking for here on the pullback. Now, here's one more variation, okay? One more variation, the V bottom. There might be a lot of buyers down here because we barely got any pullback today. And so we know that the market may really shoot lower to attract more buyers in, right? And then because there are so many buyers waiting down there, right, it may easily just whoop and run right back to those highs, okay? Those are difficult. When you get situations like that, you don't get a chance to trap in the sellers and use their stops as fuels. What you do is you just call a pop and grind. So as we start to kind of grind, remember, where's the objective? Retest of that high. You mark off that high. You mark off that low. See what I'm doing here? You find that channel and you go out and you grab that first test off of that low. Does that make sense? Right? So if they rip this thing lower, but there's so many buyers down here, you don't get a chance to trap in the bears. And all of a sudden it kind of V-bottoms and begins to grind going higher here. It's very simple. Draw that trend line off the high, right? Draw that trend line off the high, and then don't miss that first test. And again, make sure that entry is well before we retest that high. And remember, guys, this could be a trap setup like this. It could be a other failure pattern. It could be a pullback combo. All the same stuff you guys are learning in the free trading course, which reminds me, by the way, I know that most of you guys and gals are taking the free class or you've taken the free course. You're using all these setups to make money every day right now. But listen, if you're here for the first time today or you haven't taken the free course yet, what are you waiting for? I'll put a link up here for you in the upper right-hand corner. Grab that link. Take that free video series because the strategy that you'll learn in that free trading course will teach you a stupidly simple trick so you know where the best winning trades are going to be each day. And I'll help you start making money with that free class by teaching my four favorite entry patterns. If you're missing the best trades right now or you're taking too many losses, if you want a really easy roadmap to follow, definitely grab that link, take that free class. It's perfect for someone trying to make the jump into full-time trading or someone who wants to add another income stream with day trading. So grab the link. And again, I'll put all the links you guys need, by the way, in the description of the YouTube video. Now, there's one more thing, and then I want to talk about the move going higher, right? Because there's definitely potential this thing may go higher here. Sometimes, right? And again, I think it's, again, if you go in the description, right, of the YouTube video, you're going to see it's easy to look at the 60-minute time frame. It's easy to look at the 4-hour time frame and think, oh my goodness, this is ripe for a reversal. But like I said, we're too bullish right now to calling a top on this, right? It took a lot of restraint for me tonight not to say we're reversing, because in all reality, we're not there yet. But I want to make sure that we're ready for what a reversal might look like. Here, these are the two most common scenarios you will see for a reversal here tomorrow. One will be that deep pullback, but instead of the bears coming in, getting trapped and failing, right? Like what my favorite trade for tomorrow is, instead of it being trapped and failing, what happens now is they hold the pullback and they jump off the moving average, right? Just like today. Look what happened over here, right? They pop up, they pull back, and they jump, right, off that moving average. Whenever we see a reversal like this, where it pops up, pulls back, and jumps like this, what happens is It's very simple. You draw a trend line off the high, you mark off that low, and you buy that first test. It's a very easy entry. The hard part is not chasing it, right? So again, if we take off these lows, we get that deep pullback, but then all of a sudden now the bears come in and they go, no, we're done, right? All this resistance, you were right. It is going to be a reversal. Again, I can't predict the future. All I know right now is we're way too bullish to try picking a top on this market. So we have to make sure we wait for that momentum to turn, and then we can begin looking for a run back down, potentially to retest those lows here. If they pull back to that moving average, 21 EMA, and then really jump off that 21 EMA, that jump, let me start right here, that jump, it rips control, in this case, out of the buyers and gives it now to the sellers. At that point now, I can mark off that low, I can mark off that high, and just as I said before, right, look left, find some prior swings, and get into any one of the entry patterns you guys are learning in the free trading course, right? Could be a bull trap, like I'm illustrating right here. It could be a buyer failure. One of the most common we see is a failure, right? We get above the moving average. Then we get above the moving average. Buyers come in to buy that pullback. It's a trap, right? And we look to store it into those stops, right, for a run back down again. So it could be any of those entry patterns. Bull trap's my favorite. Could be a buyer failure as we go. Where does the market want to go at that point? It's pretty obvious. They want to go back and take out these lows. But remember, an easy way to think about targets on a reversal like this is the first leg, right? First leg and third leg are very similar, right? Oftentimes very similar. Okay, so once we know we have that 1-2 jump, right? Then we go out, we find the entry off the high of that channel, whichever of the entry patterns that we get. And then we look for, once we know how high that pullback is, now we know how big the first leg is, and we can now use that third leg, that first leg, third leg, to squeeze out more profit. You know, one of the easiest ways to make more money, right? We always talk about this. If you want to make more money, don't trade more often. Trade more size, more contracts, or get better at letting your trades work for you, and knowing this first leg, third leg technique will definitely help out. So if we do pull back, right? If we do pull back and they hold and blast, well, there's your reversal. I don't think we're there yet, right? We're not quite there yet. Now, there's also potential. There's one more, and then I'm going to talk about going higher here. There's one more. If we pull back, and now we don't pull back to the moving average and jump, right? Now we start to grind. Yeah, if it separates off the 21 EMA and it begins to grind. See, today it had a bit of that grindy feeling to it as well, right? Those grinds are very easy, because once you see it pop down, and again, the bears are trying once, trying twice, there's no buy right there, but once they start to grind going lower, what will happen is it'll separate off the moving average. It won't pull back to the EMA. That's usually your sign we've now reversed or disconnected now. Whatever buyers were here before, they're now gone. And so at that point now, we start finding that new channel. We draw off that low, we pin up around that high, and again, same idea. Look left, find some prior swings, and don't miss that first test. And again, I'm keeping it simple right now to keep the video short. Bull trap, buyer failure, right? Pullback combination, all the same stuff you guys learned as part of the price action cycle in that free trading course, right? And again, first leg, third leg, that'll give you an idea of where that, to squeeze that profit out of it's going to be. All right, guys. So now we get a pretty good idea now here how I want to buy a pullback, or how a pullback may turn into a reversal. The next question is what if we keep going higher? Remember, if we keep going higher, we're definitely bullish. There's no doubt about that. But we're starting to get way up, right? We're starting to get pretty high up. And you can see what I mean by that if you go in the description and grab those higher time frames. Let's grab some NASDAQ, right? The NASDAQ, of course, is very similar here, obviously, to the S&P. Let me get rid of this extra channel here. I like to give you guys as many different ideas here as I can. NASDAQ is basically the most important thing right now in the NASDAQ is a bull market into a trading range, right? So bull market into a range. And what we're getting right now is what's called a rotation off the low. Okay, rotation off the low. What I mean by that is, ranges love to rotate. They rotate back and forth. That's what creates a range. You go lower, and ultimately right now, the NASDAQ should be rotating higher, right? They should be pinching or punching to the high here right now. The oil is in a very similar situation. So that's why I said, let's talk about the breakout going higher. Now think about this. If we've got this rotation off the low, what if the NASDAQ doesn't get that rotation higher? What if it fails and rolls lower? Well, now we have ourselves in the same exact situation we just talked about on the S&P. All right, so all the same stuff I just talked about in the S&P can be applied right here to the NASDAQ. That's why I said earlier, everything we talk about tonight can be applied to your favorite market, right? So the S&P analysis that I just talked about can certainly be applied to this NASDAQ. In fact, it's almost even better on the NASDAQ. You can see that channel coming off, this range, of course, acting a magnet. So I love the idea of that deep pullback, trapping those bears, use those stops as fuel, right? We talked about that here a moment ago. What should happen, though, is, again, what should happen is we should end up rotating higher, right? Rotating higher and punching going higher. And again, you will see on the 60-minute and the 4-hour charts, the NASDAQ has some space to go, but it's not a lot of space, right? Not a lot of space. So the most important thing you got to understand about breakouts is that as we're going higher, remember, it's a bull market into a range. As we try to go higher, if we rotate higher here, the most important thing at first is you want to think about bear traps quickly, right? So as we go higher, think about the bear trap breakouts, right? So strong move, shallow pullback, higher high. We call these bear trap breakouts. So the earlier the better on these, right? So as we start to break higher, we don't want to buy very high, right? Because again, you're in resistance, up overhead, but we're still pretty bullish, right? So I can't exactly short this stuff. You know what I mean? It's not, again, we're not there yet. We might be there by the end of the day tomorrow. Again, CPI number, who knows? But right now, though, we can't get in the habit of trading we think. We have to trade what we see. And right now we see a very strong bull trend. I'm with you, though. I'm with you. We're looking at some very big, very exciting areas overhead on the slower time frames, but we're not quite there yet. So in the short term, and again, this will also apply to the S&P as well, if we do continue going higher, think about those strong pop-up, shallow pullback, higher high in price, bear trap, right? Call it a bear trap breakout. As we get higher, okay, as we get higher, now we really have to worry about what? We're buying too high. And so we're looking for bear trap breakouts, right? Bear trap breakouts on the way higher. And then think about it. As we start getting higher here now we start thinking, okay, where's a bigger channel? Maybe, okay, let's get some bullish momentum, but now let's try to get a pullback. Let's try to use those stops as fuel, because think about it. If we go higher without a really meaningful deep pullback overnight, right? If we keep going higher, I mean, how many, we have to think there aren't going to be a lot of buyers up there. There aren't going to be a lot of buyers who have the interest, right? The incentive to buy high, because there simply isn't a lot of open space to go. And you'll see that on the 60 and the 4-hour time frames linked up in the description. So if we can't expect a lot of buyers up here, we have to find something else that gives us the edge. And the edge is the stop run, right? This is why I said earlier, bear traps, stops as fuel. So if we do get that real strong kind of whoosh and run higher, I don't want to chase after it. Again, short term, small move, right? Short term, it's those bear traps, right? Because you're not too high up at that point. But once we start really getting higher up here now we go, okay, a little bit too high for our liking. Let's wait for that deep pullback. Let's trap in some of these bears again, and let's use their stops with a failure into a pullback combination to retest the high from there. Right? Now, one thing about breakouts, one thing about range breakouts is the size of the breakout leg can be used as the measuring leg. Okay, we talked about first leg, third leg a moment ago on the S&P. Well, when it comes to ranges, the size of the breakout leg, which in this illustration is this leg right here, the size of the breakout leg is kind of the only thing you have to work with at the time. And so that kind of self-fulfilling prophecy that comes along with it. So once we know we have that strong run up, okay, that's my breakout leg. And then once we know how deep that pullback is now we can anchor it and we'll know more about where that, breakout leg, this measuring leg, is going to go. All right. So again, those are kind of the two key components we want to think about here as we go higher, right? If we go higher, if it rotates shallow, right? Shallow pullback or shallow breakout, look for traps. If it really rips and runs higher, okay, now let's find those bigger channels. Be disciplined, wait for that deeper pullback, trap in those bears with that same failure pattern, and then use their stops as fuel. And again, if you're taking my free trading course right now, we talk about failure into pullback combinations right off the low of those channels. And of course, first leg, right, breakout leg is the measuring leg, and that will give us the information we need to leave that runner, right, and really maximize the profit on that trade. Another potential breakout here, right, is the pop and grind. And you can see these pop and grinds are everywhere. They're everywhere, right? We pop up, we grind, trend line, channel, buy that first test, right? So we may not get that, but boom, right? It may simply pop up and begin to grind. If that's the case here, you know the drill. We're going to mark off that high. We're going to mark off that big low. We're going to go out, look left, find those prior swings. And again, swings are where traps live. Get below the 21 moving average, and that's where a failure pattern lives. Get back above the moving average before we retest the high. That's where pullbacks live, right? Again, we call this the price action cycle. You're learning about this in the free course. Trap, failure, pullback, maybe a strength. It's tough to tell whether or not a strength to be worth it up there, but we know again, don't forget, right? First leg, third leg, that'll help you squeeze out more of that profit on those pop and grinds. All right, guys? So definitely we're keeping an eye on that breakout going higher. And again, the same thing true. I would love to say, okay, let's short this thing up around these highs. I would love to talk about that right now, but it's just, we're too bullish to short that top right now. It's just too bullish here in the short term here. So we have to be careful. If you did want to short this thing, how would I short something off the high like this? I would have to use a crown reversal. And it might happen, but I can't call that my favorite trade for tomorrow. I simply can't. I would tell all of my students in my trade room, stay away from trades like these, especially because of that range, right? You got all that momentum coming off that low. These love to fail on you. Now, if we had an overall bear bias right now, right? If we had more of a directional bearish market right now, I would say, okay, crown reversal. Buyers try once, buyers try twice, that bull trap. Okay? But again, we're not exactly a very bear market right now. I could make an argument for the bears to come in tomorrow, but again, look at the 4-hour charts right now. It's tough to call this a bear market. The 60-minute time frame definitely shows signs we're making the turn over. But again, a move like today, come on, right? You're totally gambling by trying to pick tops on this as a day trader, right? As a day trader. I'm a short-term trader, so the short-term momentum is most important. This will be the way to short this thing right off the high. Again, not my favorite trade tomorrow because the odds aren't as good, right? I don't care about what might happen tomorrow. I care about where do I have an edge. And right now, that's not the best edge we can get here. You want to save your bullets. That's a crown reversal, though, where buyers come in. They're trying to buy it a couple times. And, of course, they get trapped in this thing, and it rotates back lower, takes off right that low. That's a tough one. It's a tough one. I love the pattern idea. I love the idea. I can envision that happening tomorrow. But again, we got to be careful going with our instincts, right? We don't trade our instincts. We trade the odds. And the odds are not exactly the greatest on that trade. So if you are going to pick tops right now, that's the one you want to do. But again, it's going to be a bit of a gamble there, right? A bit of a gamble. Don't forget, too, if you go sideways here overnight, if we start going sideways, not a lot changes, right? Deeper pullback, trapping those bears, right? Punch it up, breakouts going higher. We've talked about this a few times already, but be aware of that of that trading range. All right, NASDAQ looking pretty good. S&P looking pretty good. By the way, what do you think, right? Am I crazy for these ideas tonight? I'd love to know what your feedback is. Give me a holler in the comment section. Always appreciate you guys chiming in and let me know what you guys think about these videos. So definitely get in touch in the comment section below. How about some oil? Wrapping things up tonight on the oil as we batten down the hatches for CPI Tuesday. What's the most important factor right now on the oil? There are probably three things you want to be aware of. One of them is this bullish range. Ranges love to rotate back and forth, back and forth. The amount we go below the range goes above the range, below the range, right? So it's a bull market into a trading range. Anytime we see a bullish range, we know the money is made at support levels below the range with what? With bear traps, right? Stops as fuel. Nothing new there. We also know, too, that breakouts going higher. Plenty of space for breakouts here on the oil, up to 82.5, 83. The big kahuna target for tomorrow, 83.62 on the oil. Again, like the NASDAQ and the S&P, you'll see some time frames I've got saved there for you in the description. And then I'll show you more about the bigger picture of where we are. That's the most important factor on this chart. I think another very important factor in this chart is we're pretty bullish. We're pretty bullish overall, and there's not a lot of open space below us. So, for example, there could easily be a larger bull channel down here. So you really got to be careful. On the S&P and the NASDAQ, if you recall the S&P and the NASDAQ, my exact words were, if they pull back and hold this thing, then we can short, right? And again, I'm obviously keeping it simple right now, but we talked about this 1-2 jump on the S&P and the NASDAQ. This is not a very desirable trade on the oil at this point. Again, because we're overall so bullish on the oil, we're a lot more convincingly bullish on the oil right now than we are on the NASDAQ and the S&P. And again, look at all the support down here. It's very easy to think that we may get a really sharp move down, but it may not be able to go very far. There may be a bull channel coming over here, multi-day channel. This could be nothing but one big bear trap and right back up into that range. Because, of course, ranges, they act like magnets. So without repeating myself too much on this, because again, this will be very similar we talk about on the NASDAQ and the S&P, we are right now rotating off the high of this trading range. Okay, there's a very big difference, by the way. There's a very big difference, between a bull market into a range, right? I can be pretty aggressive. Buying support levels below a range. But the minute those ranges pop up and then pull back like this, once they pop up and begin to pull back like this, now all of that, remember, ranges have to rotate. They're going to rotate off the high. So now as they rotate off that high, that's a hell of a lot of momentum for the bears. So even though I do want to be a buyer down here, nothing changes. I still want to buy support below the range. I have to be a little more patient now because of what we call rotation off the high. Remember, think about it. The same reason why the NASDAQ is a gamble trying to short up here is because of that rotation off the low. That same potential blast going higher for the NASDAQ is the exact same reason why, the same principle of why this move lower could easily punch going lower, but may not go very far. I still need to respect those bears though. So as we go lower, where we take out some of these areas of support, and keep in mind, it could be here, it could be here, it really could be down here too, right? A lot of areas down there to watch for this. As they go lower now, same idea, right? We're trapping in those bears once, twice. The reason why twice is because of that rotation off the high. Okay, if we didn't have the rotation off the high, I would only need one try for the bears. I can be a lot more aggressive like that, right? I can be a lot more aggressive. But once they run up and they come back down, now I'm going to be on my best behavior and really time the entry like a fine-tooth comb, right? Really try to trap in those bears, use your stops for fuel, and run back up. And like I mentioned before, there could be some variations on this, obviously. Right, we go lower, they may roll over here, pull back, and retest that low. In all reality, that's better. That's better for us because now they retest the low. The bears are going to shorten that low here now. Again, 1, 2, trap them in, use stops as fuel, and then don't forget, as we go higher, just like we talked about on the S&P earlier, grab that new channel and then find that first test off of that low, right? Find that first test. So again, we pull back, we trap in the bears, and then where does the market want to go? It wants to go back to the other side of that range. It wants to take out some of these big highs overhead, right? So I want to grab that failure pattern, stops as fuel, and then again, bear traps, seller failure patterns, the first test off the low of that channel, the same entry patterns we talked about tonight, and the same ones you're learning inside that free trading course. Okay, we rip lower, V bottom, right? Comes back up. We rip lower, V bottom. There might be so many buyers down there. We don't get any signal, right? It rips back higher, V bottoms off that low, grinds. Easy one. Mark that high, mark that low. The range is the magnet. Whatever you do, don't miss the first test. Okay, the first test is the best test. Target, right? Target. And then again, that rotation now, ba-boom, right? That type of rotation can really break out higher. Let's talk about the breakouts going higher, right? Same basic idea, right? So again, if it begins to really rip and run higher here, if you can get it quick enough, remember, quick enough, when markets break out like this, early in the move, that we're not buying too high, it's those bear trap breakouts, those two-try breakout patterns, right? So we don't go lower. Right? There could easily be a channel right there. It could easily be. The problem is that is not a very reliable place to be a buyer, right, in a range-bound market. Much more reliable, much easier to consistently make money. Don't try to trade in the middle. Wait for that momentum breakout to confirm and grab that first test, right? Grab that bear trap. That's a much easier way to make consistent money, right? Remember, we have to understand there's a big difference between a 40% trade, right, which is basically that trade right there, and a 75, 80% trade up here. If you get in the habit of letting every 40% trade, right, kind of lure you into the market, you're not going to make any money, right? You'll make it, you'll give it back, you'll make it, give it back. We have to be disciplined to wait for the 75, 85, 90% trades. Those are the ones you can build your career on, right, and really pay the bills with, right? That way you're getting consistent results by waiting for more trades that are more likely to work for you, right? So that one works out well. And then obviously too, plenty of space overhead here. If we were to, say, for example, really rip higher here, right? Again, same idea. Mark off these highs, find some of these channels, wait for those pullbacks, trap in those bears, right? Trap them in and back to retest the high. So if it really goes wild, like it has been lately on oil, if it rips higher here, that strong move says what? They're going to want to retest the high. We're not chasing it as it goes higher. Again, we've got some bear trap breakouts early in the process. But once it starts to really cruise going higher here, okay, now let's be patient, right? Let's look for the larger channel, mark off these highs, okay, wait for that deep pullback. And again, very, very difficult to lose money when you've got a strong move like that and the bears are pinned underneath the 21 moving average around the low of that channel. All that momentum wants to drag this price right back up to retest the high. This is why I always say, right, wait for those strong moves and wait for the pullback, trap in the bears in this case, and use stops as fuel for that run back higher. All right, guys, there are a couple more breakout patterns, but I'm running low on time here tonight, so we'll wrap things up for that. Tomorrow morning, though, we'll definitely talk more about advanced tactics tomorrow in our trade room. And speaking of trade room, tomorrow morning, 8 o'clock Eastern time. Don't be late. CPI is at 8:30 Eastern time. Remember, don't force things overnight. If it's slow, if it's sleepy overnight, you know exactly what people are waiting for. And again, I do not care. I mean, I do care. I'm a human being. I do care about inflation. But the number tomorrow, the number itself will not mean anything to us. All that matters is how the market reacts to it. So keep it simple, trade the reaction, and I'll see you tomorrow morning, 8 o'clock Eastern time in our trade room. Don't forget, too, all the important links we talked about tonight, all the important links, the free course links, the membership links, they're all in the description of the YouTube video. If you need any help along the way, the easiest way to get help from us is to call the office or jump on live chat. We got live chat in the lower right-hand corner. I know I go fast in these videos. I try to keep them as short and concise as possible, but I can definitely slow things down, go over all the different options, and make sure you get the questions answered that you need. So don't be afraid to call the office. I'm here to help if you need me. You can always use live chat there as well. All right, guys. Hope you guys enjoyed the video tonight. Hope you had a great, boy, what a great game that was this weekend. Oh my goodness. I can't think of more fun I've had watching a Super Bowl game ever since that Tom Brady comeback, the 38-3 comeback right against the Falcons, 10 years ago or number of years ago. But man, that was a great game. We're definitely paying the price tonight though, right? So get some sleep, rest up. We'll see you tomorrow bright and early. If not tomorrow morning, you better come back tomorrow night. We'll do it again tomorrow night. We'll get back to work tomorrow night, getting ready for retail sales on Wednesday. All right, guys, I'm out of here for now. Be well, be nice to each other, and you better be here tomorrow. Adios, amigos. Bye-bye for now.